Stop. Do not skip this video if you pay taxes in America. There is a massive shift happening with the IRS for the 2026 tax season, and if you are not paying attention right now, you are literally leaving money on the table. We are talking about adjustments so significant that for many of you watching this, your refund check could be $1,000 bigger than last year. Yes, you heard me right. A cool grand back in your pocket just for understanding how the new inflation adjustments work. Hi everyone, I'm Tim, your financial guide through the maze of the U.S. economy. Today, we are not just talking about boring tax codes, we're talking about your money, your hard-earned cash that the government is actually trying to give back to you, provided you file correctly. The 2026 tax season is shaping up to be historic because of how high inflation has been over the last few years. While high prices at the grocery store hurt, the silver lining is here, and it is hidden in the tax brackets. So, why is your check going to be bigger? It comes down to something called indexing. The IRS adjusts tax provisions annually to prevent something called bracket creep. That is when inflation pushes your income into a higher tax bracket even though your real purchasing power has not actually increased. Because inflation was sticky and high previously, the adjustments for the 2026 tax year are substantial. This means the amount of money you can earn before hitting higher tax rates has expanded. Let's start with the biggest game changer for the majority of Americans, the Standard Deduction. This is the amount of income you can earn that is completely tax-free, no questions asked. For the upcoming filing season, projections show this number is jumping significantly. If you are single, a larger chunk of your paycheck is now shielded from the IRS. If you're married filing jointly, that shield is double the size. This effectively lowers your taxable income right off the bat. Imagine making the exact same salary as last year, but paying taxes on a much smaller portion of it. That is the math that puts money back in your wallet. But Tim, you might ask, what if I got a raise? Great question. Usually a raise is good news until you see the taxes taken out. But because the tax brackets themselves are widening by about 3 to 4%, you might get a raise and still stay in a lower tax bracket. In previous years, a 5% raise might have pushed you into the 22 or 24% bracket, eating up most of your new income. In 2026, thanks to these aggressive adjustments, you have more breathing room. You can earn more money while staying in the 12% lane. This is crucial for middle-class earners who feel like they are constantly running on a treadmill. Now, I want to talk about something that affects millions of families, the child tax credit adjustments. While the base credit amount has been a subject of hot debate in Congress, the refundable portion, the part you get back even if you owe zero taxes, is also being adjusted for inflation. This is huge. It means for lower and middle-income families, the actual check the IRS writes you is increasing. We're seeing thresholds move in a way that allows more families to qualify for the maximum benefit. If you have kids, this is the year you need to double-check every single box on your return. Before we dive into the specific numbers for each bracket and the strategy you need to use to maximize this, I have a small favor. We're building a community here dedicated to mastering our money. If you want to stay ahead of the IRS and grow your wealth, go ahead and smash that subscribe button and hit the like on this video. It tells YouTube you value your financial freedom, and it helps me help you. All right, let's get back to it. Let's talk about itemized deductions versus the standard deduction. With the standard deduction rising so high, fewer people will need to itemize. This simplifies your life, sure, but you need to be careful. If you own a home and have significant mortgage interest, or if you made large charitable donations, you need to run the numbers both ways. Do not just accept the standard deduction because it's easy. In 2026, the threshold to beat the standard deduction is higher, which means you need a lot of expenses to make itemizing worth it. However, if you do qualify to itemize, the limits on certain deductions are also shifting. Another massive factor contributing to this refund surge is the adjustment to the Earned Income Tax Credit, or EITC. This is often overlooked, but it is one of the most powerful wealth transfer tools in the tax code. The income limits to qualify for this are going up. This means if you were on the edge last year and made slightly too much money to qualify, you might now be eligible in 2026. And the maximum credit amounts are increasing too. For a family with 3 children, the EITC can be worth thousands of dollars. Combining a higher EITC with the expanded standard deduction is how we get to that $1,000 plus figure I mentioned at the start. I also want to touch on retirement contributions. The IRS has raised the contribution limits for 401ks and IRAs. Why does this matter for your refund? Because every dollar you put into a traditional 401k or IRA lowers your taxable income for the year. With the limits higher, you can stash away more money tax-free. If you're hovering on the edge of a higher tax bracket, maxing out these increased limits can drop you back down, saving you a percentage on your entire income stack. It's a double win. You save for your future self, and your current self gets a bigger refund check. We're going to look at a specific example next. Imagine a single filer named Alex earning $60,000 a year. Last year, Alex's tax liability looked one way, but in 2026, with the new brackets and deduction, the math changes drastically. We'll break down exactly how much Alex saves, and then I'll tell you about a hidden gotcha that could ruin this whole plan if you're not careful with your W-4 withholding.
Let's look at the numbers for Alex. Alex earns $60,000 a year. In a normal year with low inflation, the standard deduction might only go up a tiny bit. But for 2026, let's say the standard deduction jumps significantly, reducing Alex's taxable income to roughly $45,000. Because the tax brackets have shifted upward, more of that $45,000 falls into the 10% bucket instead of the 12% bucket. The result? Alex's final tax bill is lower by several $100s compared to the previous year. Now, if Alex's employer kept withholding taxes from his paycheck as if nothing had changed, Alex has essentially overpaid the government every single month. When he files his return, the IRS has to give that overpayment back. That is where the refund surge comes from. But here's the trap, and this is the gotcha moment I warned you about. A big refund feels amazing. It feels like winning the lottery. But in reality, it's just an interest-free loan you gave to the government. If you get a $3,000 refund, that means you could have had an extra $250 in your pocket every single month to invest or pay down debt. So you have a choice to make right now. Do you want the big lump sum check in early 2027, or do you want more cash flow now? If you want the cash flow now, you need to adjust your W-4 form with your employer. The new 2026 brackets mean you can likely claim fewer withholdings and still break even. However, if you are like most Americans and you treat your tax refund as a forced savings account, a bonus to pay for a vacation or a new car, then you don't need to do anything. Just let the new inflation adjustments do the work. By doing nothing, your withholding stays high while your actual tax liability drops, guaranteeing that bigger check when you file. There's another area where these inflation adjustments act like a secret weapon: capital gains. If you're selling stocks, crypto, or real estate, you pay capital gains tax. Just like income tax, these brackets are indexed for inflation. In 2026, the threshold for the 0% capital gains rate is higher. This is incredible. It means a married couple can make over $90,000, depending on the final IRS release, and potentially pay 0% in federal taxes on their long-term investment profits. If you're planning to sell an asset, waiting until the 2026 tax year kicks in could save you 15% or more on that sale just because of the calendar change. We also cannot ignore health savings accounts, or HSAs. The contribution limits for these are rising too. If you have a high deductible health plan, an HSA is the ultimate tax hack. It's triple tax advantaged: tax-free in, tax-free growth, and tax-free out for medical expenses. By maxing out the higher 2026 limit, you again lower your taxable income. It's all about stacking these wins. A higher standard deduction plus higher 401k limits plus higher HSA limits equals a dramatically lower tax bill. So, let's summarize the game plan to secure that $1,000 boost. First, do not panic about inflation headlines. Use them to your advantage. Understand that the tax code is shifting in your favor. Second, look at your withholdings. If you haven't touched your W-4 in years, 2026 is the year to review it. Third, maximize those pre-tax contributions. Every dollar you hide in a retirement account is a dollar the IRS cannot tax at your top marginal rate. And finally, keep an eye on the specific credits like the child tax credit and EITC as their refundability is increasing. A lot of people complain about taxes, and rightfully so. It's complicated and often feels unfair. But the system has rules, and when you know the rules, you can play the game to win. The government is practically forced to give you this break because of the economic conditions. Your job is simply to file correctly and claim what's yours. Do not leave this money with the Treasury. They have enough money. You need it in your bank account. I want you to be prepared. When tax season rolls around, tax software will be updated with these new numbers, but having the knowledge now allows you to plan your major financial moves for the rest of the year. Maybe you delay a bonus or you accelerate a deduction. That's how the wealthy think, and that's how I want you to think. Thank you so much for sticking with me to the end. I hope this breakdown helps you feel more confident about your financial future. If you found value in this video and want to keep more of your hard-earned money, please do not forget to subscribe to the channel and like this video. It really supports the channel and helps me bring you this data. Let's make 2026 your most profitable year yet.